Welcome to our webinar, Compliance Audits, Be Ready Before They Come Knocking at Your Door. This presentation will last about 30 minutes. A recording of this webinar will be available on the Wagner Law Group website shortly, and you can access previous webinars on the website as well. Let me introduce our two panelists. David Gabor is of counsel with the Wagner Law Group in Boston, and Jeff Weberman is managing partner with Naftal and Weberman CPAs in New York City. Welcome, David and Jeff.
Thank you, Barbara. And thank you all for attending the program today. My name is David Gabor. Jeffrey Weberman and I have known each other for more years than we both care to remember. And we've talked over the years about experiences that we have had with clients in audits. A common theme that we've become aware of is that many bad audits are avoidable. Clients tell me that they thought it would never happen to them. This is not that kind of company. In fact, audits do happen. So let's talk about the steps that we can take in advance of an audit to better enable you to get the kind of results that you should experience. Let's face it. There is never a convenient time for a flat tire, or if you go to an important meeting and spill on your shirt just prior to that meeting. And in the business world, there really is never a convenient time to have the government conduct an audit. Jeff, have you noticed any changes over the past couple of years?
Quite a bit, Dave. I would tell you that I've never come across any of my clients that have actually been happy to find out that they've been subjected to an audit. Audits clearly cost a lot of valuable time. They cost a lot of money. They always seem to cause a lot of stress. They're certainly very inconvenient. They also create unexpected deployment of company resources just in terms of gathering information that auditors request. Over the last several years, we have definitely seen a tremendous increase in the amount of audits that are taking place at both the federal and state level. In the most recent information that we have available, IRS statistics show that their auditing of partnership tax returns have increased by 21% year over year, and their audits of S corporations are up by 17% over that same period of time. Without question, even at the state and local level, audits have also increased dramatically. And I think for myself, what's probably the most shocking statistic is that over the last decade, that even though the amount of unemployment tax returns have remained relatively constant in terms of the numbers that have been filed, the audits of these types of returns have increased in excess of 300%. So clearly the government is out there, and they are doing their thing.
That's pretty staggering, 300%. One of the driving forces in audits is that the government has a need to enhance its revenue, and this is especially true in challenging times. But the second thing is that the impact of technology is profound. We have recently heard quite a bit about electronic shared information between corporations and the government, almost like a big brother sort of scenario. In fact, the government has invested a significant amount of funds in utilizing that technology so that they can do the best possible job to target and identify deficiencies. Jeff, has this been your experience?
Well, absolutely, Dave. I think what you said is very much right on point. It used to be that the government had different computers that were unable to even communicate with one another, let alone us. And what's happened is that over the last number of years, government at all levels has made tremendous investment in technology, and we are finally arriving at the point where they're figuring out how to use all that technology. They're also figuring out that they're much more powerful in terms of their tax collection efforts if they communicate with one another, and therefore what we're finding out is that the federal agencies are communicating with the state agencies and vice versa. As a matter of fact, I'd like to just give you one particular thing which happened to me fairly recently, which I was very taken back by. Had a client that passed away who lived in New York his whole life. and the executor of his estate was his nephew, who happened to live in California. Tax returns were filed for the estate, and not too long thereafter, the nephew who lives in California had called me up and said that he had received a letter from the state of California, and in that letter it stated that the state of California had been notified by the Internal Revenue Service that a tax return had been filed with a California address, and they had no record of a tax return being filed in the state of California. So I think the message here is that in this particular instance, the IRS was actually providing the state of California, and I'm sure the state of California is not the only state involved here, with a list of taxpayers and their ID numbers, just strictly based upon the two-letter suffix identifying the state. And in this particular instance, there was no tax return that was due, but nonetheless, it was a question, and you have to respond to it. So clearly, the agencies are talking to one another. If we can go forward into the next slide, Dave. I'm sure everybody has heard and experienced e-filing. E-filing is also something that's relatively new, probably been around about 5 or 6 years at this point. We're seeing at this point is that government, for a host of reasons, does not really care to deal with anybody's paper anymore. They are mandating e-filing programs for obvious reason that rather than having people sitting in front of computers inputting tax returns, it's much more efficient for the computers to wind up doing it. And more importantly, and what this particular webinar is all about, is that it is also allowing the government to take the vast amount of information that they receive from a multitude of sources and to mine that data to better target their tax compliance efforts. We're also seeing a never-ending increase in the mandated third-party reporting to governmental agencies. Specifically, I'm talking about various types of 1099 reporting. The taxing authorities of all branches, whether it be federal, state, or local, have really ramped up their efforts to make sure that they're collecting the proper amount of tax. I am sure a lot of this has to do with the fact that there are all kinds of fiscal constraints on all levels of government, and it's become even that much more important for government to make sure that they're collecting the proper amount of tax. New auditors have been hired at all levels of the government. These are better trained people than what they have been in the past. In addition, the government is sending out messages that they are very, very serious about this, as we're seeing criminal prosecutions for tax cases have increased dramatically over the last couple of years.
Thank you, Jeff. One thing about sharing that's come across my desk on more than one occasion is when an auditor, whether it's a state, whether it's federal, has identified misclassification of employees, for example, the classification of an independent contractor versus employee. And once one agency determines there's been a misclassification, this isn't just an isolated problem that an employer might have. It might also spill over into tax issues, a failure to provide health benefits, retirement or pension plans, workers' compensation, wage and hour, and a host of other potential problems for a company. So even in those instances, when a company isn't aware it's doing something wrong, but in fact is doing something wrong, this information gets shared through multiple different taxing authorities and other regulatory authorities. And in this age of information and the enhanced technology, basically what the government has done is it's found ways to take information from a third party, a separate entity or organization, and use that information to determine whether or not there's been proper reporting by a company. Jeff, have you come across examples of this sort of thing?
Sure, Dave. Absolutely. I would first point out that although it's probably somewhat obvious, but sometimes people don't realize that any type of a tax examination is an audit of the taxpayer's records. That being said, what's happening now is the government is utilizing third-party reporting much more efficiently, and they are finding different ways to mine this data Another example that I could give you is every business income tax return has a 6-digit code on it related to something called the North American Industry Codes. And that gives the government, in the broadest sense, what it is that your business does. Are you a law firm? Are you an accounting firm? Are you a fast food restaurant? That type of thing. And the government now has the ability to mine that data based upon revenue levels, based upon geographic locations, zip codes, and by seeing profit margins or other information contained in these types of tax returns, you are being compared to a whole host of a very, very large universe, which the government is finding new and better ways to continue on and see exactly how they can make sure that the proper amount of tax is being reported and collected by them.
One common thread is that auditors are responsible to ensure companies and individuals meet their obligations both to the government and, in the case of companies, to their employees, both in their financial and in reporting natures. We're going to talk about income tax examinations, employment tax examinations, unemployment insurance, wage and hour, workman's compensation, and sales and use tax. But the principles in terms of strategies that we're going to discuss regarding these types of audits and in the balance of this presentation apply to all other kinds of audits. So in any event, Jeff, please talk with us about income tax examinations.
Sure. I'm going to try and keep this as broad brush as I can, only because there's a lot of information to cover here. But an income tax examination, although it could be a random selected audit, which the government does still do to compile their statistics, typically there's a reason when the government shows up if you're selected for an income tax examination. Very facts and circumstances driven. Could take place by either the IRS or your state and local level. In terms of why the government would come calling, potentially what would flag you for something. If I ran a service business, I was a consultant, and I had a disproportionately high amount of repairs and maintenance being reported on my tax return, that may wind up drawing some type of attention. I would also give you an example in terms of third-party reporting, where credit card processors now are required to report to the IRS all of the monies that they process for their merchants. So if I ran a restaurant and it was determined by the government that they know what my credit card receipts are, or more or less, that they would take a look at my overall revenues that I've reported, and if they felt that there was a very, very low amount of cash sales that have been reported, certainly below what they would expect, that may wind up bringing them into some type of an audit. What should not be lost over here is, once again, the whole issue of sharing. Governments, agencies are talking to one another, and without question, they will, the results, an adverse result of one audit could very well be shared with other agencies. The next type of audit that we have would be an employment tax examination. This is really predominantly an examination of worker classification. So we're talking about independent contractor versus employee. Dave, I would imagine you probably see this a lot in your practice.
I do, Jeff. And the IRS used to have a 20-factor test that it used to determine whether or not a person is an employee or an independent contractor. Recently, they've tried to simplify that by making it an 11-point test that they use to analyze the relationship. One of the important things is, in a case called the Microsoft case out on the West Coast, they did not care that people had signed agreements saying that they're independent contractors. They analyzed the relationship between the individual and the company, where the work was performed, who controlled the work, who set the hours, and they determined that even though these people all had contracts saying they are independent contractors, in fact, they're employees. So, it's not enough to simply say, well, this is the way it's been done in our company. They want to be independent contractors. And it doesn't matter what the individual's perception is. What really matters is, if it's going to be reviewed by an auditor, what is that auditor going to say about it? Jeff, can you talk about the types of information agents are going to look at?
Sure. In this particular type of examination, they're going to want to see the contracts that you have with your independent contractors, and they're going to take a look at what type of control exists or doesn't exist in the relationship. And what they're really going for here is, are these really independent contractors, or should they be deemed to be employees of the company? And to the extent that a determination is made to that effect that these people are really employees, once again we come back to the same results over here, that these are audits which could be shared from federal down to state level or vice versa, and they could also wind up leading into other audits in terms of your retirement plans and in terms of your payroll tax returns. So we could be talking about Social Security taxes, state unemployment insurance taxes, workman's compensation premiums, and the like. The next type of audit that we're going to discuss is an unemployment insurance audit, and this is really a first cousin of an employment tax audit. Very, very similar issues. The crux of this is an auditor coming in, taking a look at books and records just to see if, in fact, independent contractors are independent or if, in fact, they should be treated as employees. The consequences, once again, a lot of sharing that's going on over here. It can be shared back and forth between different agencies to the extent that a determination is made that somebody should have been treated as an employee as opposed to an independent contractor. You have Social Security issues, you have workman's compensation premium issues. It's a common theme throughout all of this. And I think Dave is going to... Sure.
Okay, thank you. Let's talk about wage and hour. Wage and hour audits focus on whether employees are paid all money due them on a timely basis. The concerns auditors often have are the failure to pay wages or overtime. Examiners look at time records of non-exempt employees, whether exempt employees are properly classified, and whether independent contractors are really employees. And if there's a finding that there's been a failure to pay any money due employees, there's potential for interest, punitive damages, and counsel fees. And one of the other things I wanted to talk about with you is that this can lead to class litigation. And this is one of the areas that there are an awful lot of plaintiff lawyers throughout the country who are gunning for these types of cases because they feel they can make a ton of money on them. And they would be looking at a failure to include people in the health plan, a failure to include them in a pension plan. They would look at the failure to pay the wages or overtime. They'd be looking at punitive damages on the state and the federal level, and they would be looking at an award of counsel fees. So it's so important to make sure those classifications of exempt and non-exempt and the independent contractor and employee are done correctly.
Workman's compensation audits are, again, another first cousin of the employment tax audit. Very, very similar issues, once again, in terms of independent contractor versus employees. This can be performed by auditors that work for quasi-government agencies. In New York State, we have something called the State Insurance Fund, but there are also independent insurance companies which provide this coverage. I think it's important to understand that workman's compensation premiums are a function of your absolute payroll dollars plus a rating that is assigned to what it is that your employees wind up doing for a living. So as an example, if I am a window cleaner in a skyscraper building, what is the likelihood of me getting hurt as opposed to someone like me who typically is sitting behind a desk pushing a pencil all day long?
Well, Jeff, I don't know. I heard you're pretty dangerous with a pencil.
Well, I don't stab myself too often, but yeah, occasionally, yes, I do. But that being said, clearly the window cleaner, although this particular guy may actually wind up being more concerned about dying rather than getting hurt, but certainly he is much more likely to be hurt while working than somebody like Dave or myself, and the premiums will wind up being reflected that way. Once again, it's a common theme. I hate to keep on hitting you over the head with it, but again, these audits are being referred back and forth amongst agencies. So if they know that they've already got you, they're going to refer it out to their sister agencies so that somebody else can come and get you. In terms of sales and use tax audits, really has directly nothing to do with employment tax situations, but these are audits which are performed by state agencies because state and use taxes are local, state and local taxes. Typical examination will wind up dealing with quantifying whether sales should have are subject to sales tax, or they're not subject to sales tax, non-taxable sales, and that arises if in fact you are selling some type of merchandise or a service which typically would be taxable, but maybe you're selling it to a not-for-profit agency and they do not pay sales tax. So another goal of an audit like this is to make sure that the flip side of the sales tax, which is the use tax, that you are accurately reporting your use tax obligations and that you're also paying any tax that's owed with that. I think what's maybe not a little bit intuitive into all this is that if you have an auditor that comes in the sales tax area and the results of their examination determine that perhaps you did not report all of your sales, there's a very good chance that that's going to be referred out to other agencies, which could wind up opening up an income tax examination. It could wind up opening up an employment tax examination because possibly that money was used to pay people and you didn't report all of your payroll tax obligations. So these things are very insidious, and they can wind up going in a lot of different directions.
Thank you, Jeff. That's actually very important to keep in mind. So let's talk about what companies can do and also what you can do to advise your clients, colleagues, friends, and family in companies so that they can be prepared in advance of that audit. I think the first thing is that we need to take ownership of the information needed to satisfy an auditor. Don't simply assume someone else is going to handle this, or, well, this is the way it's been done since before I came into this organization, therefore it's got to be fine. Take the ownership to make sure that the information is appropriate. And please also keep in mind, ignorance of a law, rule, or regulation is not a defense in any kind of audit. It's your responsibility to know that what you're doing is correct and in keeping with the standards in that particular type of situation. And the second thing is redundancy. The third thing is redundancy. It's repeated because it's so important.
Dave, I would just jump in here real quick just to point out, not trying to be too flip about it, but the dog ate my homework doesn't work here as an excuse if you're selected for an audit. The fact that you don't have your records, for whatever excuse you may wind up having, an auditor doesn't want to hear that. It's your responsibility as the employer to have certain records, and if you don't have them, it's a problem.
Good point. You know, we've been in a time where last year we had Hurricane Sandy, which ravaged major portions of the East Coast. Jeff, including your neighborhood. I understand you were without lights for how long?
Too long, Dave.
Yes.
Way too long. I forget. I'm still trying to forget.
I think you told me 3 weeks. And then people in the Midwest with the tornadoes that hit them. Even if the records are destroyed, there is still the obligation to file all proper forms and to pay all money due and owing employees. So the redundancy is, don't simply leave it in a computer and think it's fine. Have a backup system in place. It's critical. The other thing I want to talk about is self-auditing. This is one of the things we believe will help enormously if you do end up being audited. The first thing to do is to make a checklist of the different types of things that you want to have audited and bring in a professional to conduct the audit and see if your records are in place, see if your designations are appropriate. And by the way, in addition to auditing because of compliance, you may also find by doing an audit that there's been some form of a misappropriation of funds, which is something that I had that happen with one of my clients recently, and they found out that there was stealing going on, and they've wound up being able to identify who was involved in the theft and to become that much more profitable in the future.
Yeah, Dave, you know, I would tell you I think this is a great point that a lot of people really don't pay enough attention to. We in my office don't do nearly enough of this, in my opinion. The the problems that arise in audits, unfortunately, are usually after the fact, and we wind up going into damage control mode. I think it's a very worthwhile exercise for people to try and take control of this stuff before the notice winds up showing up. It's not going to stop an audit. Anybody can be selected for an audit. I can be selected for an audit. But what it will do is that it will give you a better sense of the fact that you're prepared for things. You're going to know what it was that your responsibilities were beforehand, and it's your chance to mitigate any potential damage before that damage winds up happening. The other thing that I would tell you in my experience is that a good portion of clients do not utilize the services of their professionals properly. And what I mean by that is that all of us, we don't know what we don't know. And what I'm trying to say there is that if you don't ask questions of the professionals that you deal with, whether it be legal or accounting or tax, whomever it is that you wind up dealing with, if you don't ask questions to find out what's required of you, what are the current trends that are going on, you're never going to know. You would have to be a very, very well-read person, and even if you are, I'm not quite sure that that's going to wind up getting it done. I would also say, in my opinion, I think it's very important to foster a relationship with the professionals that you utilize so that they are going to want to call you up and say, hey, I just became aware of something. How are you dealing with this? Are you even aware of it? If you're not aware of it, maybe we should meet and we should talk so that you are aware of it and you can address it should you feel that that's the proper thing to do.
Yeah, great points, Jeff. There's a saying in the HR world, this is what a successful employee in a certain position looks like. We can use that here as well. This is what a great relationship between a company and its professional looks like. The professional is going to every now and then kick the tires and make sure designations are correct, proper records are being maintained. They're being maintained for the full amount of time the law requires that they're maintained. They're going to be asking questions of you, not simply fulfilling the task asked of them, and you're going to be asking questions. This will enable you to avoid those kinds of problems. And the laws, rules, and regulations are changing on a regular basis, and the volume of rules and regs governing companies now are enormous. And next year, with Obamacare coming in, there's going to be even more concern that we're getting things right. Keep in mind, the burden of maintaining the records is your burden. And Jeff, if you can talk briefly about the consequences when you fail to meet that burden.
Sure. Well, as Dave pointed out, you as the business owner are required to maintain the records. To the extent that your records are missing or incomplete, I think you pretty much guarantee the likelihood of a very unpleasant audit result, which is going to be very costly, both in terms of tax being assessed, interest being assessed, penalties being assessed. And again, once again, we have the specter of an adverse audit result will very well likely lead to other audits up and down from state to Fed, from Fed to state, from vice versa. So it's just something that's very, very critical over here, and you really can't lose sight of that.
Okay. If you are selected for an audit, it's also important that you try not to handle it yourself or have someone handle it who is not experienced in handling audits. If I was to be sued, I'm going to hire a lawyer, even though I've been practicing law now for, okay, confession, 25 years. I'm still going to have a professional, because if I represented myself, I'd have a fool for a client. It's important that you do the same thing. The relationship with the auditor has got to be a strong, solid, fundamentally sound relationship. And if you do it yourself, you're not going to have that kind of a relationship.
Yeah, I think it's important to understand that auditors are trained professionals. The questions that they ask are very much on point. They're trying to elicit a response from you, and once they start to hear different things, that means something to them. So once you, as a novice, if you attempt to defend yourself in this, you may very unwittingly start to say things and create problems and issues that you don't even realize you're creating. And once you do wind up creating them, they may be difficult, if not outright impossible, for somebody to overcome, even when you wind up bringing in a professional. So you never want to be perceived as standing in the way of an audit. You don't want to obstruct it. You want to be truthful, but at the same time, you want to be on point and make sure that you don't have people saying different things that go against one another.
That's great, Jeff. Let's talk about a couple of takeaways. Instead of thinking, oh, my company will never get audited, this only happens to other companies, anticipate that you will be audited and take the steps now. And if you're not audited, all the better. But if you are audited, this will have a profound positive impact on your company. Start with that redundancy. Have your records in more than one place and make sure that they're accessible. And oh, by the way, I heard a story from one business on Long Island that got ravished by the hurricane, and they had their tape backup in the file closet. And when they had tremendous water damage, their computers were destroyed, and so was the tape backup. You know, just think clearly in redundancy, what if, and go through as many what ifs as you can anticipate. The second is a self-audit. Again, have a checklist of things you want to make sure you're doing properly when you conduct this audit. And the goal is to survive an audit, and the goal is also to make sure that people in the company are compliant.
Yeah, I think you also want to be very straight with the professionals that you engage over here. There's nothing worse doing this for a living than finding out that my client neglected to tell me some very, very important things over here, and I wind up in a very compromised position, which immediately puts me on the defensive, and I start to lose credibility with the auditor, and they're starting to question what it is that the client is saying. So we can't help you if we don't know all the facts. So it's very, very important for, I think, any business to wind up being straight with the professionals that they wind up dealing with.
Okay. Also, don't assume that someone else is going to handle it. Take ownership, handle it yourself.
Yeah, and I would also say if you take our advice in terms of putting some type of a working system into your business to make sure that you have adequate records, I think it becomes incumbent upon you to periodically check that the system is functioning properly, if at all, because otherwise you're just kidding yourself. I would just say, for those of us that are a little bit older, there used to be a TV show on by the name of Hill Street Blues, and the way that show always started was the staff sergeant, before he sent his guys out into the field, had this line, which was, let's be careful out there. And I would pass that along to everybody that's listening over here, because clearly it's becoming a much more dangerous place out there in the field of taxation and audits.
Okay. Basically, you have two piles on your desk. Admit it. One pile is the work I've got to do now, and the second pile is the work I'm going to do when I can get to it, but I really want to get to it. If you put this in the pile of work you'll do when you can get to it, you'll never do it. Please put this in the pile of things you're going to handle right away. And we thank you very much for listening to this program. If you have questions, please feel free to reach out to Jeff or to myself, and we're more than happy to answer your questions. Barbara, back to you.
Thank you, David and Jeff. That was really interesting, a little scary. And thank you to everyone for attending this webinar. A recording will be available on the Wagner Law Group website shortly. And, of course, please feel free to contact David or Jeff if you have any questions. Thank you very much.